Well, let's welcome in Arvind Sanger of Geosphere Capital is with us now, joining us. Arvind, good to have you with us here as always. Thank you very much. So that's the question. I mean, what next, in your opinion?
Well, I think we have to wait and watch. Clearly, the ball is in Pakistan's court, whether they choose to escalate and retaliate and how far they go, because the risk is tit-for-tat escalating. The opportunity is that if Pakistan does something token, because they'll have to do something to save face, is my guess. And if they do something token and call it a day, then maybe things can calm down. So, the markets are obviously have been on tenterhooks the last few days. Today, it looks like the markets are hoping that whatever was expected has happened and it's not going to get worse. From a foreign investor standpoint, I think maybe people have been a little bit less focused on the immediate risk and more focused on the global macro factors. I think the immediate risk may cause a little bit of a knee-jerk reaction in the next 24 hours. But I think the important thing is if this doesn't escalate, then the India story, hopefully we can focus on the economic fundamentals again. And that's what, as investors, that's what obviously we're not ignoring the horrible tragedy in Kashmir and everything else, but from a financial standpoint, we want economics to be the focus, not war.
No, absolutely. And, it's all about sort of expecting or hoping that there's no further escalation. There's another statement, I think, that's coming from the US State Department urging exactly that. Earlier this afternoon, Mr. Rubio spoke to the national security advisors from India and Pakistan. He urged both to keep lines of communication open and avoid escalation. So it seems right now international powers are going to put pressure on Pakistan to avoid any form of escalation. We don't know if Pakistan is going to comply or not, but let's see. Arvind, so for the next couple of, I'm only talking immediate here and now. I mean, would you be on the sidelines in India till this clears up? What should we expect in the immediate near term?
I think from a long-term investors like us with a long-term view, we would look for any dislocations to create opportunities to buy because we're long-term believers in the story. But, are we going to be a little bit more maybe greedy in terms of wanting a little bigger pullback to buy? Maybe. But I think that it doesn't change the India story. And again, the hope and the expectation and the, most likely outcome is going to be maybe some modest tit-for-tat and then, things settle down. That would be the outcome that would be, best for both countries to move forward from here. And that would be the central assumption we would proceed with from our investment standpoint.
Absolutely. That's the absolute the expectation out there as well, that this is going to be limited response, and that's it. I mean, for now, not very much beyond that. That is, of course, what the financial markets in that sense are pricing in. Arvind, the other stuff, apart from this, what we've seen from last night, the confirmation that China and US are going to start trade talks this week. So Besant and Greer, the USTR, are going to meet Chinese vice premier in Switzerland. So it's a bit of a de-escalation signal to the market. That, and of course, then there is the India FTA, which is India-UK FTA, which has been signed yesterday evening. Your thoughts?
Well, I think the China situation is a little more complicated, and it may take a little bit longer to reach any kind of reasonable ground, because the reality is that U.S. is not, maybe it comes down from 145% to 60-65%, but it's still going to be pretty severe. But as President Trump mentioned in the Oval Office today, when he was meeting with the Canadian Prime Minister, that he's looking for a number of countries to do deals, and everybody will pay some tariffs to do a deal with the U.S. So, I think there's a lot of uncertainty, but I'm hoping that, India will be amongst the first few, maybe along with Japan, Korea, that seems to be at the front of the line to do a deal. And if India ends up with, something like 10% tariffs and that's it, and lowers its barriers like it's doing with the UK with the announcement today of their deal, and if there's a win-win on both sides, then it would be great for India. But I'm not kind of holding my breath on any great outcome just from one meeting from China. Maybe they start to lower a little bit the extreme levels of tariffs, but I don't think the US-China trade, while it may resume from a complete stop, it's certainly not going back to any levels that existed even a month ago.
By the way, since we're talking US-China, let's quickly fire up some of the Asian markets as well, just to take stock of the situation. Last night, Wall Street, of course, ended negative. Markets were down between 0.75% to about 1%. But futures have turned positive. Wall Street futures have turned positive. Let's get the Asian markets up on the screen as well for reference. Hong Kong, for instance, is reacting very well to two positives coming in today. One is, can we get the markets up? If we can get the hotboards up, that would be helpful. The Hong Kong market right now is 1.6% higher. The two positives being that, yes, later this week there's going to be a meeting and perhaps trade talks will chug along. The other positive is the announcements out of China and the easing they've announced. The key interest rate is being lowered by 10 basis points. And not just that, the Chinese have cut the reserve requirement ratio, the RRR, by 50 basis points as well. So it's twin bonanza for the Chinese market, which is why China is up. That's a limited point I'm making. Both mainland markets and the Hong Kong markets as well on the upside. Arvind, just want to get your sense in on the overall sentiment on India, because while you're saying, you'll be using any dips to perhaps come in, the fact that there's been so much uncertainty around China, that's also helped those flows come back into India in the last 10, 15 odd days or so. So if there's a thaw in US-China and in general, if there's a stimulus there as well, if the Chinese market starts tactically seeing a uptrade, could that create a bit of a problem for us?
Again, I'm not going to be able to call the day-to-day trading on India versus China, but the reality is that I think that US is probably become slightly less favorable. Dollar, and economic issues again overhanging the US market, and emerging markets or Europe have been benefiting. China clearly has the worst hit from tariffs. So if its tariffs go down some, maybe China benefits on a relative trading basis for a little while. But the reality is that from a structural standpoint, India is sitting in a very strong position. EU and now UK just yesterday, and now the EU coming to try to do deals with India on a free trade basis. So India is a destination for a lot of trade flows to redirect. And I think that deal with the US could happen too. So I don't think that China, US, any kind of, some agreement to de-escalate is going to disadvantage India, because on a structural basis, India is a much bigger winner, and China could only just get some temporary relief.
Absolutely. In terms of the bigger macro shifts that we've been talking about, and actually, Arvind, let me just quickly, for viewers who are still sort of getting up to this news flow, let me just quickly recap, what has happened. And I'll come to you and we'll continue this discussion in just 2 minutes. If you're just sort of tuning in, the news is that India has launched strikes against terror sites in both, and we'll have the graphics and the visuals coming up. Terror strikes in Pakistan and POK. 9 sites have been targeted, and these sort of targets are specific. The Ministry of Defense, of course, was the first to yesterday put out this information. It's called Operation Sindoor, a precise and restrained response to the barbaric Pahalgam terror attacks that claimed 26 lives, including 1 Nepali citizen. 9 terrorist infrastructure sites in Pakistan and POK have been targeted, which are the roots of cross-border terror planning. And again, now this is important. Importantly, no Pakistani military facilities were hit, reflecting India's calibrated and non-escalatory approach. The operation underscores India's resolve to hold perpetrators accountable while avoiding unnecessary provocation. And of course, a detailed briefing on the operation will follow later. So this is what has happened right now.
Prashant, just one more addition. While, of course, these are the 9 strikes, what's happening is that the skirmishes across the LOC have increased, and there are 3 civilian casualties, and that is something that the army has confirmed. 3 civilians killed in what the army is calling indiscriminate firing by the Pakistani military across the LOC as well as the international border. And those are the kind of issues that we have to observe carefully as well. We also have Nigel joining in. Nigel, good morning. What a morning. But feeling powerful, feeling strong, standing tall. with the armed forces.
Well, indeed, the last time around, the enemy was in denial. This time around, they can't be in denial. The other point is with regard to the Operation Sindoor, the name that's been given to it, right? Sindoor is something that's very, very important for a married lady. And they went in there and they, in fact, disrupted many honeymoons and many couples that were just married out there.
Yeah.
The significance of that Sindoor is very, very important. And you hurt a lot of sentiments out there.
That's true.
So that's, a lot of newly married couples, your first destination that you want to go to is Jammu and Kashmir. And in fact, that was something that I did as well. So they went in there, they hurt sentiment, they hurt married couples. So Sindoor is so very, very, very important for a married Indian lady. And they hurt. And in fact, the response that we have given is, something that you should take note of. And they can't be in denial.
How beautifully put, because of the morning news flow. Frankly, I didn't pay so much attention to how this operation was titled. But you're right. They hurt our hearts. And we've hit back strong.
Well, indeed. And in fact, the response as well that's been put out is that in all likelihood, this is the hit that we wanted to effect. And there may not be any escalation from here on. So we've given our response. Let's see what they do, whether or not they have anything in their kitty.
No, absolutely. Guys, you saw that news flow, right? The Pakistani defense minister claiming on Bloomberg television that they've captured
Indian soldiers
or something.
Yeah. And shot down 5 of our planes.
Coming up and saying that, well, it's actually not correct. It's just the point is that when you see a lot of the news flow which is coming through on social media, especially from Pakistani handles, etc., be careful because a lot of it, as they say, the fog of war. So you will see a lot of stuff being pushed, and I think trust verified sources when you're sort of looking for information, because I think most people will be sort of tuned in and clued in terms of what's happening. So you want to go to reliable sources of information, and some of them clearly are not. But this is, of course, the latest developments if you're just sort of joining us this morning here on CNBC TV 18. Arvind, of course, is still with us, and we've been speaking with him and asking him what happens here. And I think Arvind said it's, of course, up to the Pakistani side now in terms of what they want to do, if there's an escalation, etc., going to be. But on balance, some of the other stuff, of course, has been pretty decent. Arvind, just a quick word on what you began by saying, right? Some of the global macro shifts has certainly benefited India, which is a lot of money moving out of US assets. And I think it's been a big theme which has now become kind of mainstream into emerging markets. And even if you look at even within emerging markets, there aren't that many deep, liquid, well-governed markets. And I think, it's a very basic, fundamental thing which is coming back as a talking point. And India certainly is one of them. Valuations are a problem and all of that. Yes, absolutely. And I think everybody recognizes that. But there is this bigger shift. Would you agree, Arvind?
Yes, and it's not just emerging market. Europe has done extremely well. So it's kind of anything but US. And I think, it's not going to go too quickly in one direction without some ebb and flow. And you've clearly seen, even US markets recover a little bit sharply in the last, week or 10 days. But I think the reality is that on a structural multi-quarter basis, we see this as something that is going to benefit, non-US markets, and India certainly is positioned for that. The most important thing from an Indian standpoint is economic growth, earnings growth. And last couple of quarters have not been particularly stellar, but hopefully some of the leading indicators are suggesting that things are turning. So I think that's going to be the most important driver as to whether India gets its more than fair share of those flows. India has to have that growth story that starts to re-accelerate, and that'll be the key driver for that.
All right, Arvind, good to see you. And as always, Arvind, final question before we let you go. The next big trigger that global markets are going to be looking at tonight is going to be what the Fed is going to do. What are you penciling in? As of now, odds are we don't get a rate cut. But in fact, with the commentary, hopefully will be a little bit more dovish. What are your expectations, and what are you factoring in with regard to Fed rate cuts for the remaining of this year?
Well, certainly no rate cut now, but June is looking more likely. Whether or not Chairman Powell tips his hat on that is what we'll be watching. I think what he's probably going to end up saying is that they're going to be looking at data very closely and they're going to be looking at, employment data. And if that starts to show signs of stress, then they'll be ready to step up. On the other hand, they'll also be watching inflation expectations, and they want the inflation to get off control. So between those two, my suspicion is that they will lean more towards the employment data. And if they do, and if that does give room for cutting, then June becomes very likely. So that's what I'm expecting from tomorrow. No cut, but more indications that they'll be watching the employment data closely.
By the way, here in India, Arvind, specifically, defense as a pack has done quite well over the last 1 month or so. I mean, import substitution, etc., has been a big theme. We saw big corrections, of course, there, and now starting to come back. I mean, some of this does highlight. I mean, actually, there was that Stockholm Defense Report, which is a big global report which came out, and they just released, I think, about a week ago, data for last year. Defense spending, I mean, it's not a surprise, but hit an all-time high. And there's a country-by-country breakup and a lot of data out there. Any thoughts on stocks from the defense space, Arvind?
Unfortunately, we have no direct exposure, maybe some indirect exposure, but the reality is that I think that on a global basis, given that the U.S. is becoming a less reliable security umbrella for a lot of parts of the world, I think, whether it's in Europe or it's in Japan or it's in Korea or it's in, the Indian subcontinent or elsewhere, the Middle East, I think defense spending is on a structural rise as the world becomes a more dangerous place. And frankly, the flip side of that is that stock market multiples globally don't necessarily do great if there's more global, risk and tensions of war. But certainly defense would be an area that should structurally benefit from this.
And that's an important point, Arvind, right? I mean, the US for the last at least 30, 40 more years has been sort of present everywhere and has kind of acted as a bit of a stabilizing force, which of course is no longer there in that sense. At least that's the indication that this is a shift away and this is a more each for himself or herself kind of a world. So in that sense, maybe a little bit more in terms of a dangerous place, as you called it, Arvind, right?
Yes. Unfortunately, yes. And that does long-term also, more tension, more uncertainty, more volatility could mean lower multiples.
Okay. All right, Arvind, we'll leave it there for now. Thank you very much for joining us. Good speaking with you. And thank you once again for joining us on a short notice.